Hello, everybody, and welcome to the show today. I'm really glad you could join us. So today we're diving into one of the topics that people want to know the most about, which is some of the hacks, some of the tactics, some of the ways that you can effectively work with real estate and turn that into a primary or secondary business to be able to earn a lot of money. So with us today is Mark Mascia. Now, he has over 17 years of real estate investment experience and a career portfolio valued at over $1.5 billion. So Mark founded Mascia Development, LLC in 2006 and as the CEO and chairman. Now, prior to becoming a successful entrepreneur for the last 12 years, he oversaw 500 million 26-story development in Manhattan while he worked for Archstone, a former Fortune 500 publicly traded real estate company. Now, from early on, Mark has been working closely with some of the country's wealthiest families and continues to do so with his own company, having two master's degrees from New York University, Washington University, or Georgia Washington University. Mark is an adjunct professor at NYU's Institute of Real Estate and has a deep appreciation for sharing his knowledge with everyone he meets. He's also started his own charity, Invenium. I pronounced that right, but I will get the correct pronunciation from him, that works tirelessly to provide educational pathways and medical support all over the world. Mark has exceptional talent conveying concise and meaningful message to all of us today, and I'm really glad he can join us. So Mark, I messed up that whole thing, but welcome to the show. Thanks for coming on.
Great, Ty. Thanks for having me. Excited to be here.
All right, so what's the proper pronunciation of your charity?
It's Invenium. It's a Latin word, so a little bit more difficult. Yeah, sorry about that.
No, are you kidding? I'm sorry I messed it up. It was so mean of me. I should have clarified that before we started.
No problem.
So really glad you could be here. So tell us a little bit about like your real estate experience of where you kind of been from here. I know the bio kind of touched upon it, but kind of give us a brief overview.
Yeah. So, I mean, as you did a great job in the intro, I mean, basically was working for large publicly traded, institutions, learning kind of like the quote unquote traditional or right way to do real estate. And, it was amazing. Great experience. Worked with some of the smartest, greatest people I've ever met. But, it wasn't really that fulfilling for me on an individual level. Like the autonomy was very limited, the sort of self-directed learning and decision-making was not there really, which, I mean, is traditional of all big companies. So I wasn't really surprised, but I just thought that was always something that I wanted to do. So I went off on my own shortly after kind of getting that great experience and obviously scaling down my level of expectation. I mean, I wasn't going to go right out the gate and do a, $500 million project in New York City, but having had that huge company experience built a lot of confidence around like what I was able to do when I jumped off and did my own thing. And so starting off just kind of doing stuff, we founded the company in New York City where I was living at the time, and subsequently have done projects in 17 states across the US, multiple different product types. So had a lot of different learning and growth experiences along the way, and just kind of, being very entrepreneurial and sort of the opposite of the large company experience in the sense that wherever the opportunities were, that's where we were going.
Nice. That's awesome. So how's things going for you now? What are you up to now?
Yeah, it's been great. I mean, we moved to Phoenix about 2 years ago. So we moved the company and my whole family and everything here. We still have a lot of our team on the East Coast. So we do have sort of a multi-state team as well, even though we're still pretty small as a company. And that's been really great in a transition. And we've been expanding a lot into the West, which is previously a market that had kind of sort of eluded us. So now we're doing a lot more local Phoenix projects, a lot more sort of Western state projects, where in the past it had been mostly like, Southeast, Mid-Atlantic, Northeast, which is kind of like our traditional bread and butter, and some in the Midwest. But yeah, no, it's been great. We've been hiring a lot of local people, kind of getting back to a more traditional company approach, whereas in the past it had been more of a distributed team. So yeah, I mean, everything's been, always bumps along the way, but so far so good.
Well, a lot of people want to know, from the beginning, and some are already in the real estate investment business and would like some tips and tactics from you today. But from those that aren't in yet, a lot of them are trying to figure out, like, apart from money, what does somebody really need to get started in this industry?
Yeah, I mean, you can come at it a lot of different ways, right? I mean, so money is like a very easy way to succeed, right? If you have a lot of money or your family has a lot of money or people that have a lot of money, that's a very easy way to have a competitive advantage. But I mean, it's not that different from any other business. You really got to figure out what is your competitive advantage. So some people, do what they know. So they work in a neighborhood that they're familiar with and no one else is that familiar with. And that's a way of building a competitive advantage, or not no one else is familiar, but the other people are less familiar, paying less attention to it. Other people, can use, like I used a lot lot of my institutional contacts and knowledge to come at it a different way. So, I'm part of a CEO mastermind group of a bunch of different real estate companies, and we just met last week. And a lot of them are much bigger hustlers than I am, meaning they just kind of like put the nose to the grindstone, cold called the heck out of things, and just kind of came from an angle of just a lot of attention to sales side process, where I came from kind of the opposite tact, where it was more, kind of using the institutional contacts and the high net worth families and things that I had known from the bigger companies, and using my background. Now that happened to be my level of expertise and that I could bring to the table that not everybody could, but by no means is that the only way to be successful. So I think it was just a matter of like, using one of those three ways, or any other way that you can find that you can bring to the table a competitive advantage. Because it's just like any other business out there. There's a lot of competition. It's not like me or anybody else is the first person of the day like, oh, I'm going to make some money in real estate, right? Like that's a very common entrepreneurial path.
Well, what are some of the questions you think somebody should ask before they even really think about jumping into this?
Yeah, I mean, I think I'm a big believer in finding a guide of some sort, whether it's a partner or someone like myself to passively invest through, or a school, some sort of path. I mean, even podcasts like this and others where you can really learn a great deal from people who know a lot more than you when you're first starting out, right? So you can really short circuit a lot of the time and mistakes that you'd make otherwise. I think, the biggest thing is like who's going to be your guide. And it doesn't have to be, I'm one of those people who's searched my whole life for a mentor, and I've had many, many mentors along the way, but I always kind of had in my mind this kind of like Obi-Wan Kenobi kind of mentor picture where you're like, oh, this person's just going to teach me everything I've ever needed to know, and it's going to be amazing, and we're going to hit it off and be best friends. And, I've gotten a lot out of my mentors in the past, but I've never really found that one person. So I've really used like the world as my mentor, everyone, including you in this podcast. Like I hope to learn something even for myself to better myself in my business. And I think that's a huge thing, because it really just short circuits the whole timeline. You could spend 10 years learning something that someone can share with you, in 1 year because of all their experience. And I think that's been true of my own life. And I'd say that's the biggest thing as far as looking for other people, is just kind of learn from others in that way to.
So what do you think is, where does somebody kind of get started jumping into this? And it makes sense. I love what you say, because look, I've learned this in my life too. If you work with an expert, you cut tremendous amounts of time and money out. And people try to not do that to save the initial money that it costs to work with an expert, right? But the problem is that you end up costing you 10x beyond that, because you make all kinds of mistakes that cost you substantially, especially in the real estate field, where one mistake can cost you $100,000. So if somebody is getting started, they're kind of wanting to dip their toe in the water and explore, what do they first do? Do they first need to decide the kind of investments they're getting into versus apartments and residential and all of that? I mean, do they need to kind of develop a strategy first, or what do you think is the first step?
Yeah, I definitely think that's right, actually. So I think, whether you're actually going to be a real estate professional or you're going to do it on the side or whatever it is that you're going to do, I think a lot of people have the misconception in our industry, and it's not so much a problem that I've seen in entrepreneurialism in general. Like a lot of the entrepreneurs I meet, it's been ground into them to have a business plan or some kind of plan, or know where you're going, have a roadmap, all these kind of things. But somehow in real estate, that's like not a thing that most people pay attention to. And I don't mean like no one. Obviously, there's plenty of people who do, but I think a lot of people, especially like when I was coming out of NYU, where the real estate masters that I had, a lot of those people were going out to eventually start their own companies, and really all they focused on was the next deal, the next opportunity, the next project. And while that's a great way to get started and get your feet wet and have some traction and momentum, it's not a business, right? Like doing one particular transaction doesn't make a business. And I think whether it's a part-time business or a full-time business or whatever you're looking to get out of the real estate model, you still need to know what your expected outcome is for the long term, not just the next deal. Because you may say, look, I'm going to buy the house next door to me, or the apartment building across the street from me, or whatever it is, as one opportunity. But you got to make sure, do you want to be in the single family rental or the apartment world? Is that even the thing that you want that accomplishes the goals and has you have the skill sets to do that, or your mentor has given you skill sets to do that? And I think that's the big thing that a lot of people miss. And even myself in the beginning, we had some struggles with like, who do we want to be as a company, as opposed to just going deal to deal, be like, oh, we can do this deal and we can do that deal and we can do this deal, because it's more like shiny object syndrome, where you really have a problem of, where are you really trying to go? Because at the end of doing 5 deals of shiny object, you don't really have a company. You have a hodgepodge of random transactions that may or may not have worked out for whatever reason. But that's not a great way to go about things. So I think you're right to sort of say, start with a plan of some sorts. And of course you can adjust, and you're not going to have, especially if you're just starting, you're not going to have the be all end all best plan ever, but you have to have kind of some kind of a semblance of where you want to go and how you think what your plan is going to do is going to get you there.
So when you get started, you kind of develop a plan, you figure out you want to deal with residential properties, right? Let's say, where do you start? What's the next step then? Do you start looking for the right property to buy? Is that kind of the next step? And if so, do you have advice of where you look? Do you look locally, you think, to first get started, or kind of what's your thoughts there?
Yeah, I mean, so if I put myself back in the original shoes of like just getting started, I think the biggest challenge I had, and I'm assuming most other people will have, or other people I've mentored have had, has been, how do you know when it's a good deal, right? So if you look at the property across the street from your house, or whatever random property you find on the internet, or whatever the transaction is, how do you know that that's the right transaction? And how do you know it isn't, right? I mean, so you may say this is the best deal ever, and it just happened to be the first deal you looked at. Most times it's not going to be, but let's just say for the sake it could be. And how do you know if it is or isn't? And so sometimes the biggest overwhelming factor, again, can be that sort of lack of true depth and understanding of like what you're getting into. And so I think, yeah, it's great to start with an original transaction, start looking at that thing, whether it's calling local brokers, looking on the internet, driving around neighborhoods and looking at signs, like whatever level of sort of building a level of understanding you can start with. But, generally speaking, like I said, the first transaction you're looking at is not going to be the one you're going to do. So it does start to build that knowledge and understanding. But again, running that by someone who has more experience than you, someone who's done transactions before, or possibly investing with others and seeing how they do things before you start doing it on your own. Those are ways to kind of, again, short circuit that learning, because you can look at, honestly, we do look at thousands of transactions every single year before we buy, one of those transactions. So our closing rate, even though we know what we're doing, and we've done it for almost 2 decades, we still look at tons and tons and tons of transactions before we actually execute. So again, and we know specifically what we're looking for. If you don't know what you're looking for, you could spend that many times looking at deals and never find one that feels good to you. So I think it's the danger of analysis paralysis in some respects, because I'm not a big fan of never executing. I'm not trying to talk people out of that, but I am sort of saying, like, I think you want to be careful not to like just say, oh, it's the first deal I look at, so it's the best deal ever, and I'm going to jump in, because it's really just probably you don't know that enough about it to know if it's good or bad in the beginning. So finding those experts or at least assistance through, again, learning on shows like this or whatever path you can take to kind of, short circuit that timeline, the time scale.
When you're flipping and you're investing, even for buy and hold, what do you do to make sure that you're getting the right value on the property you're looking at?
Yeah. So, a lot of it is what I said first and foremost is looking at tons of transactions and making sure, relatively speaking, to what's available, that we're making the right opportunity and right choices. So again, by looking at tons of opportunities every year, we're able to sort of say, okay, yes, this is the best deal we've seen in the last 500 or something like that, based on a bunch of different criteria. But there's obviously different ways to skin the same cat, right? It's not saying that that's the only way. But it's also, again, knowing your outcome. So as the market becomes more competitive, as it has over the last 5-7 years, your criteria does need to change somewhat, because the deals that you did 5 years ago are not available today, and they won't be. So you have to kind of say, well, what relative risks am I willing to take on more now than I would have had to 5 years ago, to still make transactions make sense, and align that with the capital source. So if you're the only one doing the transaction, if it's your money 100%, then it's a lot easier. You just say, am I comfortable? Yes. Okay, move forward. But in my case, I use mostly large family offices and big capital sources that are, not my family. So I have to kind of get them interested and say, this is what I think makes sense. Do you guys agree? Does that make sense? And sometimes it does, and sometimes it doesn't, right? Sometimes I say, this is a great home run deal, and they say, I don't like this risk for XYZ reason. Like, they may hate this particular tenant, or they may have had a bad experience with that part of the city before, or whatever the case may be. And so therefore that transaction doesn't work, even though it would work for me personally. If it was 100% my capital, it might not work for others, and vice versa. So you really need to, again, align what your plan is, what you're thinking, with the way you're going to execute that transaction. So who your capital source is and things like that.
So what do you think about the easiest way to get into this? And obviously, somebody should work with an expert. I think we've established that. But if somebody's looking into it, they've kind of got a strategy developed. They're starting to look for properties. They're starting to look at a volume of properties to get an idea of value and what types of things that they need to do. So they've kind of done their research. And then what do you think is one of the next steps? Is it really reaching out to the actual seller? Are they looking for stuff that's on MLS? Should they be looking for stuff? Pocket listings? What's kind of your feedback?
Yeah, I mean, all of those can be great. Definitely, like like I said, that my other mastermind members, they were more the cold callers that would source their own deals, and they'd say, "I find great deals because I find the deals that aren't on the market because that's what I spend all my time doing." And that's 100% a very valid, good strategy for those people who may not necessarily know what they're doing, because what they would have done or what they did do was they went out there and found a bunch of transactions that nobody else knew about. They tied them up, controlled the situation, and then brought those to other partners to say, "Hey, I don't know how to fully execute this, but I have this great opportunity. Would you be interested in helping?" And so to me, that's more of like a joint venture opportunity. So whether you partner with them, the person you're bringing these transactions to, on a forever basis, or you partner with them on a one-off basis, or it can be kind of, again, investing more passively with others and sort of replicating what that is. So a lot of our investors that started out early on, they were sort of using us as an educational platform to say, "I'd like to look at how Mark looks at these deals, how he's turning away the ones he is turning away, how he's structuring his capital, how he's structuring his investment pitch," so that they can say, "Oh, I get it. That makes sense. And I like what he did over here, but I hate what he did over there. And I'd do that a different way. And so that's my competitive advantage," or something like that. But we found it, and even still to this day, I mean, we often joint venture partner up with people who have transactions or have interesting other things that maybe we don't have. So I think partnering up is always a great way, again, to short circuit, because it helps you learn, and it also helps fill out the skill sets you may or may not have, especially when you're starting out. So I mean, like I said, even to this day, even though we have been around for well more than a decade on our own, we're still all the time joint venturing where there's opportunities, new markets. I mean, you're in Florida, and one of our good partners is in Florida, and we're looking at a lot of transactions down there with them because I don't have boots on the ground in that market, and they do, and they're able to sort of do some things more proximity based that I'm not able to do. And it makes a lot of sense for us to partner with people like that, because that's a market we want to be in. And so even to this day, I'm still willing to do that kind of stuff, even though, some would say I technically don't have to. I just think it's a great way to kind of short circuit the time scale.
Yeah, it's all in the network. Would you have states that you try or how does somebody find the right geography to get into it?
That's a great thing. So real estate, the old sort of adage, obviously, that we've all heard is location, location, location. And a lot of that is, it's cheesy and kind of oversaid, but it is true, right? I mean, real estate is a physical investment. It's one of the reasons it's the most exciting, because you can kind of actually physically do changes to it. Whereas stocks, it's very difficult to kind of do much that's going to change the value of a stock as an individual investor. But real estate, you really can. You can have a huge impact on the individual asset, both because it's physically present and because of the scale of it. But also the concept of the physical presence means you can't move it, right? So you can't say, "Oh, this is a amazing building with amazing income, but it's on the wrong side of town that nobody's going to want to own, and nobody thinks it's good, and it's only getting worse," right? So the first and foremost is you got to look macro to go micro. So you say, like, is a market that I'm interested in, is it growing? Is really, if you want to be set up for success. It doesn't mean you can't go to markets that are getting devastated year in and year out and shrinking and doing and economically not doing well. It doesn't mean you can't make money there. It's just you're setting yourself kind of on a very steep uphill climb, as opposed to kind of having a tailwind and really pushing you ahead. So what we do first and foremost is places like Florida, places like Arizona, places like Texas, where you have huge influx of people just growing more every year. Lots of reasons to be there beyond just climate, other things, taxation, whatever the reasons are that people are moving there. Because population growth from a real estate standpoint is your best friend, right? The more people that are moving to an area, and the more that area is growing, and the more economic viability there is. So again, with more diverse industries, if you have a one job town, even if it's growing, like the Dakotas were a good example of this. When oil was going crazy up there, they were growing like gangbusters. But the minute oil pulled out, now they're dead. There's ghost towns up there already, modern ghost towns. So you got to be careful of those kind of things. But it really just common sense kind of stuff. If people are moving there, things are growing, properties are appreciating, land is not increasing. There's only a certain amount of land. And if people are moving there, that land is increasing, the property values are increasing. You're kind of putting yourself in a really good path for progress. So that's the fundamentals that we look for. And then it has to be, area by area. I mean, you can be in a great growing part of Houston and be on the, dangerous side of town, and you can still lose all your money just based on investing in the wrong part of Houston, even though Houston's one of the fastest growing places in the country.
Interesting. What about property class? Do you stay with a certain niche? You believe in niches? What's your thoughts there?
Yeah, I mean, it's interesting. I mean, we're smaller and entrepreneurial, so we've been able to change and do a lot of different things. I mean, we've done student housing, we've done multifamily housing, we've done retail, we've done medical office, we've done industrial. So I mean, we've done a wide breadth of things, and over the past decade plus of opportunities, mainly because we're going where we think the growth is for the next few years, and it's hard to predict much further beyond that. So I'd love to say, hey, I know what's going to happen in the next 10 or 20 years in XYZ sector, and so I'll focus on that sector of real estate. Problem is, I don't, right? I'd be a lot richer than anybody else if I did know that answer. But so rather than try to play that game, we do try to create expertise within a class. So like we have a lot of in-house expertise in multifamily and retail and medical office, because those are product types where we've done probably the most transactions. But we're looking at a lot of self-storage right now. And the way we're doing that is exactly the advice I just gave you, right? I'm partnering with a guy that I've known for quite a long time. I trust greatly. And he's got a ton of self-storage experience where I have none. And so we'll team up, and I wouldn't do a self-storage deal without someone like that. So I'm not just going to pretend I know everything about self-storage and try to compete with him. But where there's an opportunity to partner up, and I can bring some capital and expertise and things that he doesn't have, and he can bring some local operational experience, that's a great fit for us to test out a new market segment that a lot of people are really interested in. And I believe there's still a lot of growth, especially in a lot of these. Arizona is a great example where we don't have basements and we don't have attics, but we still have a lot of stuff like everywhere else across the country. So self-storage makes a ton of sense here just from those market fundamentals. Now, I don't know self-storage, so I'm not going to jump in and do my first deal here without someone like that. But by partnering up with them, I'm able to do that rather than, quote unquote, learning with someone else's, on my own mistakes and my own money. I'm going to learn from his experiences over the past, 10 years of doing that. So that's kind of how I've handled that. But I mean, the traditional way of doing real estate, so I'm giving like kind of the traditional advice, it's stick to a lane and really focus and understand it and know it really well. So that's both from a market location and from a segment. So you'd want to say like, I love industrial properties, and I know, my city is growing tons of industrial on the west side of town. So I'm going to do that. And that's where I'm going to focus, and I'm going to be the expert, and I'm going to know everything about it. That's the traditional way. That's the most safe, sure, successful path. I've just found that, for me, it's worked better because I can't see that far ahead. I can't see what the next 10 years is going to hold. And I don't want to do something today that I spend all this time, effort, and energy, and that 3 years from now, no one's going to want industrial. And I'm not saying that's the case. I'm just saying that that's as an example.
That's interesting. What about fix and flip versus buy and hold? Do you have a strategy there regarding what you think people should do, whether they should keep part of the properties and then or sell them, or what's your strategy with fix and flip versus buy and hold?
Yeah, I mean, when you're getting started, fix and flip tends to be the easiest. So whatever kind of product type that is, whether that's truly single family home fix and flip like you see on TV, or even like the commercial property that we do, much larger scale properties that we do, like $10 to $30 million deals. That time scale of like 2 to 3 year holds or 3 to 5 year holds tends to be much more palatable to most investors because it gives them some sort of semblance of liquidity. They put their money out, they get it back, they know they got a return on it, and they're happy to move on to the next transaction. So that's following traditional logic. That tends to be a lot easier. I will say, however, my own personal belief and what I've seen, I work with some of the largest like family offices in the country. And for those who don't know, family office is nothing more than like a fancy way of saying like really, really rich people who are related that work together in a certain way. And so we have a lot of those kind of families I've been lucky enough to meet and work with over the years. And almost all of them who have made their money in real estate have done it in the long term. So they haven't been focused on these short term, huge returns. They're focused on like, how can I buy a property in, a market that's growing and just own it for 20, 30 years and just kind of like, reap the benefits along the way. And then at the end of it, I'll have this hugely valuable asset because I just held on. So I do think personally and in my own life, I execute strategies more on a long-term basis. But in my business, because of investor demand, I traditionally hold first for shorter periods than that, unless I'm working exclusively with one of those families who agrees with my strategy.
That's awesome. What do you think is, for somebody coming in, what do you think is a good strategy to get started with? Should they be looking, because a lot of people are getting started on this for passive income, right?
Yep.
And do you think that that's kind of the better way to go in the beginning, is just work on doing it in a way where you're building that passive income? Or do you think they need to do some fix and flips to be able to kind of create a financial war chest per se, to then be able to move on and start doing the buy and hold type properties?
Yeah, I mean, to the extent you have financial wherewithal to invest more passively, it's the slower, steadier, kind of more safe approach, I'd say, in that respect. So I think, yeah, Ty, I mean, to the extent you have the ability to financially do that, that's a great approach. Or to the extent you're, even if you don't have tons of money on your own already, but you're willing to do smaller properties. Like I said, literally some people I know are just like, I'm going to buy the house next door and make it a rental, right? Like that's kind of a very small scale way of getting into the real estate industry, but absolutely nothing wrong with it. I don't mean that in a pejorative sense. It's just sort of like a different scale than what we work on, but nothing wrong with it. And so if you want to do that and that's the scale you're comfortable with and you can economically do that on your own, nothing wrong with that. I think traditionally by doing the work and you'll learn more. And so by doing those sort of, shorter term fix and flip kind of opportunities, you'll learn more and you'll make more money in a shorter period of time that you can then go off and parlay into the more passive investments. So I think if you're starting out and you really don't have all that capital to begin with, you'd probably be better off on kind of doing the extra work yourself, I think.
Yeah, makes a lot of sense. What about tips for better ROI? I mean, you've been doing this a long time. You've got a billions under your belt, right? So what are some of the tips and tactics that you've seen to get the best return on investment? The stuff that, rookie investors oftentimes miss, that as an expert, you've really seen that this little lever here makes a big, big change in the profitability of the deal.
Yeah, no, it's a great question. I mean, I think a lot of it is just looking at things creatively. So one of the things that outsiders can bring to the industry, which I think is overlooked often, is if you don't know the quote unquote traditional right way to do things, and sometimes that can be a hindrance, obviously, but sometimes it could be a big benefit, right? You can say, well, why don't people do X? Why don't people do Y? And it's the answer is not usually because sometimes it's because it's a terrible idea, but a lot of times it's oh, we've just never done that. I don't know how to do that or whatever. And I'll give you a specific example. I mean, when Airbnb started becoming a big thing, right? Some people were oh, this is a crazy thing that's never going to last. And some people really latched onto that early on and they started saying, hey man, I can buy this apartment building that's getting, $500-$600 a month in rent. And I can start getting $500-$600 a weekend from renting it as an Airbnb. And I can make this basically like a distributed hotel that's kind of some of the units may be rented at $500 a month just because they can't fill it 100%, but I'll start doing more and more and more. And now you see some of these that are literally 100% occupied by Airbnb and they 5x the income or more. And it's all just because they're running the same building that everybody was running a different way for years now in a new kind of, way that, and a lot of those people are coming from outside the industry, right? They may be coming from, they stayed at an Airbnb and they're this is a great opportunity. Now I want to apply it to my own personal business. But those types of unique, creative ways of looking at things are ways that you can really juice returns. We've done this successfully a lot with cell phone towers, putting cell phone towers on buildings. So you look at a building that doesn't look that tall, but it happens to be the tallest building in an area. We've had buildings where it's 5-story building, and you wouldn't think that's a particularly attractive cell phone tower in most places, but in some of these places, that's the tallest building around, and we can get 4 or 5 cell phone leases on the roof and really juice the value of that building in some cases up almost $1 million. So it's things that you wouldn't necessarily think as the traditional real estate. If our traditional real estate model was medical office in that case, it's not a medical lease to sign a lease with a telecom company, but it was super lucrative, right? And I'm not the only person thinking of that kind of thing. That's just an anecdotal example. But anything you can do to kind of creatively juice, I think, is really where you want to be focusing, because the main business model is competitive. Everybody knows how to rent real estate to someone else, whether it's apartments, whether it's medical office, whether it's retail. That model has been established for hundreds of years. So it's how can you think about things a little differently to kind of juice that last little bit of return. If you're talking about tips and tricks, that's really where the accretive margins are made.
Yeah, and that's the kind of stuff that you get really working with people that know what's going on. Do you guys have a coaching program, or do you guys have a system that you're helping other people get into this and succeed?
Yeah, no, I mean, I wish I did. I think if I had the time, I would love to. I teach at NYU, as you mentioned in the bio, and that's kind of my way of giving back. And, I'm happy to, help any of your listeners that's interested. I always kind of mentor people in any way I can help. I think that a more educated kind of real estate world is better for all of us. So I don't look at it as a competitive thing at all. But really the way we've been handling that for the most part is just giving people an opportunity to invest with us. So that they don't have to do all the work and be as much of an expert, so they could still get exposure to real estate in a more passive way, as you mentioned on the call. But they don't have to do all the work themselves. They just give the work to us and we give them the return. So that's really the way that I've been kind of doing this. And that's what I do with my own family. My dad, my grandfather, other people, they wanted to get into this, and they had, when they were younger, they had some more time and did some of this stuff, but now they really just invest through me, and that's been a better fit for them, so they can keep doing, what they want to do, whether it's work or retire or whatever. And I can kind of keep them involved in the real estate aspect of it.
Yeah, so they get the best returns. Work with somebody that really knows what's going on. Don't get burned. Still get the return on it without getting all. I love that. I've always said in business that you really need to let people do what they do best. And then, even if you take a smaller portion of that, that's fine. Let them do it because you actually get a larger portion because they do it better than what you ever would have done on your own. So I think it's brilliant. Do you see a lot of people jumping into this as a way to be able to finance their retirement?
Yeah, I think more and more, especially as we're, as the traditional sources of retirement have kind of like all, stocks, bonds, pension funds that are no longer available, like as that's kind of gone away and become less an option, people are looking at more alternative sources, right? I think that's why you see like Lending Club and some of these other non-traditional ways of creating passive income have been so popular because everybody's searching for it. And even younger people. I mean, I have a lot of friends who are, in their early 40s, and they're like, hey man, I just put a ton of money away and I put it into these passive types of income, and I quit my job and that's all I do now is manage those, those cash flowing assets or whatever they may be. And that's not something, I mean, maybe it was happening before and I just wasn't paying attention, but I feel like it's been happening a lot more than it ever was. I think that sort of search for passive income is a real thing.
That's awesome. Anything I've left out, anything that I should ask for those people that are getting into this, that are already in this, that I probably should have asked but didn't?
Yeah, I mean, I think Charlie Munger is one of my huge, like my theoretical mentors. I've never met him, of course, but somebody I pay a lot of attention to. And he always says, like, tell me where I'm going to die so I don't go there.
Which I love.
Right. It's like, and I mean, it's obviously tongue in cheek, but I think it's very true of life. And I think, a lot of time, what I spend doing is asking a lot of people, like, what did you do wrong? And I don't mean it to be like, to make fun of them or do anything negative, just to be like, hey, teach me from that. Because what I learned the most from is not what I succeed from. Not that those are the easy things, right? If I just do something and I'm magically great at it, whether it was sports or anything else in your life, you don't really learn that much there. You learn a lot from like the class that you started off getting a C in and working your butt off to make sure you got an A. Like that's where you really learn, right? And that's true of life in general. And so what I think, I spend a lot of time doing, and what I would suggest other people spend time doing is be like, what are some of the things you did early on, or what are some of the things you do even today where you made a huge mistake, where you lost a lot of money, where you did something really that you didn't understand, that it was going to be a problem, and then it blindsided you and knocked you out, right? Those are the kind of things that, because if you miss those things, a lot of the other things you'll figure out just by being a smart person. Like business, especially real estate, a lot of these things, but it's not rocket science, right? We're not curing cancer. We're not doing crazy things here. So to avoid those big knockout mistakes, the rest of the stuff, yeah, it may hurt you. You may not make as much money as you thought, but if you miss those knockout mistakes, you'll be all right. And I think, sort of examples of mine have been, banking, financing mistakes, like not understanding the full implications of lending and debt structure, because real estate is a mostly debt structured investment, right? Traditionally, 65 to 80% of the purchase price or total project cost you're going to do is going to be loaned to you by a bank. So really, like, your bank is your biggest partner and your bank is your biggest risk, because if you don't really understand that structure and how that's going to be played out, you have missed, the vast majority of the transaction you're actually trying to work with. So that in the past has been a problem for us. Like we've worked with the wrong banks who have left us at the altar, and we've lost hundreds of thousands of dollars doing that kind of thing, where we thought these groups could execute and they couldn't. And that was shame on us for not doing the diligence ahead of time. No investors lost money in that, but I personally lost hundreds of thousands of dollars. And that was a huge, horrible knockout learning mistake that, took me a long time to recover from. So I think, just, sorry to ramble on, but essentially say, like, ask those kind of questions of, like, what are the biggest things you screwed up on? And that's an easier conversation in a one-on-one kind of over drinks conversation than it is kind of like, in front of a crowd or something. So I wouldn't say ask that at a conference, but that's what I've learned the most from. And I think other people should ask that question.
Mark, where can everybody go to learn more?
Yeah. So feel free to email me. mark@propertyincome.com is the easiest kind of email address, but our website is propertyincome.com. I'm on social media like Instagram and LinkedIn. So feel free to reach out however is convenient for you. But my email, I'm pretty good about checking, although I've been getting a lot worse with all the influx of emails these days. But like I said, happy to help anyone who's interested, and really appreciate you having me on the show.
Cool. I appreciate you coming on. Thanks again. All right, so everybody, listen, this is really informative. I think we got a lot of insight about how somebody that's done billions in this or managed this in one which way or form, whether he's done the real estate or managed buildings that of that value, how he does things. And I think it's interesting because what he's saying is that, look, let the experts do what the experts do, and then you still get the return without going through this whole process of learning a whole new industry, a whole new career, and getting burned and losing a ton of money. And that's, I think, a lot of the fears that people have that prevent them from getting into it. Where do I go to invest? How do I know what to invest in? How do I know I'm getting a good deal? These are a lot of the questions that I see that people are commonly asking. So, Mark's given you a way to be able to do it without taking on those risks. And even if you don't do that, he's a really knowledgeable guy, and there's a lot of great info you're going to be able to get in looking at his site. So I'm going to put several of his sites here on the show resources page, but make sure you check out propertyincome.com. There's a lot of great info there. It's propertyincome.com. Learn a little bit more about what's going on in the real estate investment industry, and learn a little bit more about having the work all done for you, where you can actually be able to do it and get a return without taking on all the risks. So thanks everybody for tuning in. Make sure you check out propertyincome.com.